when people think of investing in property, they often think city center is better. So properties like Canary Wharf in London, maybe properties for 600, 700,000 pounds, which is maybe a million, 1.2 million Sing dollars, which once again sounds really cheap because that's a prime property in a prime location in London. And here's where the next game changer really is. And that is, I only want to buy ordinary properties for ordinary people. The equivalent of that would be a HDB in Singapore. However, by policy design, HDBs are for ownership, not for investment. And hence you can only buy one. I mean, it would be great if we could buy 10 HDBs, stay in one and rent out 9. It just doesn't work in Singapore. However, just because it doesn't work in Singapore, it doesn't mean that it doesn't work well in the UK. 80% of people in the UK live in landed properties, not flats. But a lot of people think that when they invest in the UK, they will buy a brand new condo, which a lot of investors want to buy, but not a lot of locals want to live in because the locals simply prefer to live in landed properties. So if you want to have the most options for people to buy and rent your property, you should look at ordinary properties for ordinary people. Ask yourself, what type of properties do most locals buy, live in, rent? And these are the exact properties that you should be buying, not properties in a swanky showroom peddled by people who are looking to make a quick commission out of your purchase. The next game changer is that when you look at a Golden Goose property, one should always buy for cash flow, and any capital appreciation is a bonus. A lot of amateur investors get it wrong. They buy properties that are negative cash flowing from the get-go, try to see how much money they can top up every month from their savings or from their salary, and hopefully it goes up in 3 to 5 years' time. And that's a really risky strategy because we all know there are lots of properties out there that have not risen in 3 to 5 years. They might have stayed stagnant, or some even have come down in value, especially if it's a new built property, simply because it was overpriced when it was first sold. So it takes a while for the surrounding properties to catch up in value with their new build, typically 5 to 10 years. So buying for cash flow ensures that you're making a profit from the get-go, even after deducting all other expenses. And you're not worried about where property prices are going because every month you're making $500, $1,000, $5,000, and you have that holding power to hold that Golden Goose property through short-term fluctuations. The general direction of property prices is up, but it doesn't go up in a straight line. So buying for cash flow gives you the certainty and holding power to enjoy the cash flow, but at the same time, enjoy capital appreciation as a bonus, because property investment should be a mid to long-term strategy. If you're looking to buy a property and sell it in the next year, then I would suggest not going into property at all. But if you're looking to hold it for a minimum of, say, 5 years, 10 years, a lot of us want to buy and just never want to sell that Golden Goose and leave it as a legacy for the kids, then all the better. A lot of people ask, when is the best time to buy property? Well, the answer is 10 years ago, and the next best time is now. People with the wrong mindset and knowledge going into property in markets where prices are going up, they would say, oh man, it's risen quite a bit. Maybe I shouldn't buy now. I should wait. In markets where the prices are going down, they would say, oh, the prices are coming down. I should wait for it to go lower before I buy. And if in markets where the prices are relatively stable or stagnant, they're just undecided. I'm not sure where the prices are going to go. Or maybe I should wait. They end up waiting and waiting. And if that is you, you probably have kicked yourself because there have been many opportunities where you say to yourself, I wished I had taken the opportunity then. But hindsight is always 2020. The idea is, how could we use these indicators and filters to help us to gaze into the future such that we make money when we buy now, and buying for cash flow is a surefire way of doing that.